This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here on this Friday, June 24th. Great to have you with us once again. Thanks for making us part of your day. I'm your host, Jesse Allen. You can find us online, markettalkag.com. That's our home on the web, markettalkag.com. Well, joining us today as we wrap up what's been a pretty rough week in the trade, we say good afternoon to our good friend Ted Seifried with Zaner Ag Hedge. Ted, good afternoon to you, sir, and hopefully you've had a good week despite, it's been a rough one in these commodity markets, my friend.
Yeah, somewhat of a depressing week, Jesse. Absolutely. It's never fun when you get the feeling that the party might be over, right? That being said, in front of a 3-day holiday weekend, with July positions getting really close to the end of their expiration, option positions, I made a lot of really big moves last Thursday and Friday to collect a lot of the value that I had sitting out there. And I started to build a short position out in December, buying puts and selling some calls. That's kind of done good things this week, obviously. And for the most part, while I didn't go from really not being short at all to being extremely short, I just started scaling in, kind of in hindsight, wish I had done more, obviously. But for the most part, treaded water this week, which I think is a pretty good thing. But ultimately, Jesse, I'm afraid that what we saw in the markets here this week is a bit of a statement. And I think it's a sign of things to come. Not saying that we can't have a weather market, pretty significant bounce from the lows that we just made. And you can't say for sure that we're not going to go up and make new highs. But to do that, I think, becomes a much more difficult task than what it would have been at the end of last week. And the reason for that isn't just about a little bit of a cooler and wetter forecast that we saw when we came in Monday night into Tuesday. The market is realizing, the grains markets are realizing that there's a bigger thing happening here, something that other markets have been realizing for a little while. Look at copper, for example, look at lumber, look at cotton, look at a lot of different commodities. You're seeing this positive current of inflationary undertow really starting to subside, at least for now. Now, whether this is the end of that inflationary bubble or not, kind of remains to be seen. I really thought we'd have one more sort of big push of inflation as Americans do what we're best at doing, and that is going out and consuming and enjoying the summer, especially since a lot of us have been under restrictions or lockdowns for the last 2 years. And this is the first real, wide open summer we've had in a long time. And I am personally seeing that. I do see a lot of people on the roads, a lot of people going out to restaurants and pools and things like that. But at some point, especially when we get to the dog days of summer, when we usually see a big drop in that fuel consumption and the backyard barbecues and things like that, i.e., as we get into August, that's really when I thought this inflationary bubble would really burst. But again, we're seeing those cracks in the foundation happening already. A cliche that I use, I don't love cliches, Jesse, but is, we trade futures, not today's. So maybe the market's getting ahead of something like that. Either way, this is a much, much different climate than what we had at the end of June of last year. At the end of June last year, I was really, preaching the idea of, hey, let's make our cash sales, but also let's re-own those bushels with calls, because we had this just red hot demand. And because of inflation, higher prices were not doing anything to price ration demand. So that means, if we were in fact going to have to price ration demand, as we had some perceived tight ending stocks, what price were we going to have to do that at, right? So at some point, I was really optimistic that we were going to continue on, make new highs, or at least that the downside potential wasn't really that great. This year's a much different story for me, Jesse, because if you take that inflationary influence out of the markets, then price rationing becomes a much easier thing to do. And I would say the prices that we have right now are not only enough to do the trick, they might be a bit over what we really need to see that happen longer term. Because here's what happens, Jesse. The products that we make with these raw commodities, if you have inflation, people are willing to absorb the higher price of those products, i.e. ethanol, i.e., well, just fuel in general, i.e. Meats, livestock, or, what you're going to pay at your butcher store for a 1 pound ribeye. People are paying the high prices, then it's okay to have high price input costs, high price corn, high price soybean meal. And you can take that down one more step to high price inputs going into grow those things too. But for corn and soybeans, if people stop paying for the products and that demand starts to fall, then you get a backup of cattle or of product at the packers. They don't need to pay up for cattle anymore. So cattle start falling. Your cattle rancher isn't going to put as many cattle on feed. So his corn demand's falling. It's a domino effect, right? And if that is in fact what we are seeing, and even if it's not what we're seeing right now, we will see that. I really feel pretty strongly with what the Fed's doing and with the amount of wealth destruction that's been created in the financial markets. I really feel strongly that we will see that. Whether it's now or later in the summer and fall, that still kind of remains to be seen. But when that happens, it's a domino effect, right? And then you start to lose demand at these prices. So even though we're talking about weather and being a concern and potential for supply issues, and even though we can say, hey, next year's balance sheets look pretty tight for corn and soybeans in particular. Well, if you start chopping some of that demand off, all of a sudden supply issues don't mean as much. All of a sudden, tighter balance sheets look a lot less tight. So again, that's ultimately what's going to happen. And I didn't really get that feeling last year, but this year is a much different story. So I'm really worried that by the time we get into harvest, you could be getting this sort of perfect storm of this inflationary bubble burst of, maybe we didn't have a significant supply issue. You have some demand destruction, not just here domestically, but globally, and falling stock markets, falling economy, things like that. If all that's coming together in September, October timeframe, we could be looking at lows that are much lower than what people would expect based on what we saw last year, and maybe even much lower than what people think are possible. So that's the concern that I have. I'm using a much different approach to these markets this year than I was last year. And again, I think this week was really kind of a foreshadowing of what's to come. Again, I'm hopeful, I'm optimistic that we have enough weather uncertainty in the forecast to keep us on our toes and maybe give us a halfway decent recovery. But I think that recovery is going to be meant to be sold at this point, Jesse. And full disclosure, without giving away too much of the secret recipe, I suppose, I think the idea of owning shorter term calls, August, September calls, preferably on old crop, especially if we're talking about soybeans, is a good way to take advantage of a summer weather rally. But it also does a really good job of protecting a short position further out in time. And if we get through the end of August without a major problem, you really find it hard to imagine that we're going to be rallying into harvest at that point. Because that probably means that not only did we have a major production issue, but probably, again, this inflationary undercurrent is really subsiding.
Well, and on the weather front, that's always ever changing. We have our forecasts, and we're hearing about maybe some of this pineapple corn starting to show up in parts of the eastern corn belt, but it's still early. We could still get rain in the forecast, so I think weather just remains a volatile factor we have to watch and see moving forward.
Quick note on the weather, though, Jesse. The corn crop's made in July, the bean crop's made in August. And, with the kind of slow planting that we had in a lot of areas, we needed a lot of heat to kind of catch up. Heat and humidity, pineapple and corn, okay, great. I mean, look, that makes for great Twitter fodder. But the fact of the matter is, I don't think we've done any real significant damage yet. If we repeat the month of June through the month of July, then we have a real thing to talk about. But, again, while we could be looking at above normal temperatures, that precip has started to creep in a little bit more. And even those temperatures have cooled off a little bit. I can't say right now that when I look at the forecast that, we're headed for a big catastrophe. And I think the market's caught in wind of that too. But again, we're going to be, corn in particular, is going to be very sensitive to this July forecast. So if that changes come next week and we start leaning back towards that hot and dry, things can change very quickly. I'm also going to say that I think what this week did, we took a lot out of these markets. It wasn't just weather, but the excuse is on the weather, especially for corn. So now we put the onus on this forecast to continue to trend cooler and wetter. That's what the expectations, that was the change in expectations this week, is that now we see a little bit cooler weather forecast. Now we expect that to continue going that way. If it doesn't continue going that way and turns around, you're going to have a lot of these funds and speculators that exited this week very aggressively, coming back in very aggressively too. So that forecast, again, is going to be a very big deal in the short run. Again, long run, we go back to the conversation we were having earlier. There's a bigger gorilla in the room potentially.
Very true. Ted, do you think Friday's action, especially quart of beans, was maybe just a dead cat bounce, using that term? Because, I mean, we did see some decent price action on Friday trying to end the week on a decent note. Wheat, I'm sure probably some more harvest pressure there. That market didn't do that well. There may be other things. But overall, Friday's trade, do you feel like it was just kind of that dead cat bounce approach here, or was there something else underlying?
No, really not. I mean, really not much else underlying, aside from we probably overdid it in just, basically 3 days. But you'd gone from being you'd gone from a fairly neutral relative strength index to being really rather oversold in a very short period of time. And whenever you have that much carnage, that much selling pressure in 1 week, in front of a weekend, whoever was aggressively selling it is probably going to take a little bit of profits. There is always that chance that the forecast is going to change back to more bullish after a weekend. So, I don't know if after a week like this, you really want to go home aggressively short in the short-term future, nearby futures, things like that, from a speculative point of view. So, yeah, I hate to use the term dead cat bounce because I'm hopeful that this bounce is more than what we just saw on Friday. But again, that kind of depends on the forecast. Bear market balance is more. I think we are transitioning more towards bear markets in these grain markets in particular. So you're going to have these bounces after massive slides that we saw from this earlier shortened week, which is really 3 days.
With the wheat market specifically, we hear a lot. I mentioned about the harvest pressure, but also, the Black Sea issues, I feel like have kind of been put on the back burner with Russia, Ukraine. That's maybe starting to come back to the forefront a little bit. Obviously, we're watching the financial markets, the dollar and everything else there. Do you see anything with the wheat markets, though, outside of those few issues that are maybe, holding us back on Friday a little bit?
Well, certainly harvest pressure, right? And this crop isn't as big as what we were thinking when we were planting it, right? So the good news there is that we should work through that harvest pressure quicker than we would in a normal year because, if guys have done any sort of marketing throughout the year, which they should have, with the big spike in prices that we had, then there's less to price coming out of harvest, right? So my thought has been going in, even before we started harvesting this winter wheat crop, is that by the time we get to about 40 to 50, let's call it 45% through the harvest, that's when you're really going to see that initial harvest pressure dry up, because that ain't a lot of the wheat going to town after that has already been priced or it's going into bins, right? So I don't think we're far away from being past that harvest pressure in the wheat, Jesse, but I also feel like wheat is a market that really needs some pretty aggressively bullish news sometime in the relatively near future to turn the charts around. Because right now you've got a fairly negative technical bias happening in the wheat. And that might have to come from row crops potentially. But you look at the Russia-Ukraine situation, we get more and more talk about opening up corridor for Ukrainian shipments of grain. At first it kind of started out as a bit of a joke, right? Like, what is Turkey going to do? But now you got the UK involved. So okay, now there's a little bit more behind that, and then now you have a UN plan that okay, this is starting to become a little bit more legitimate, at least from my perspective. That being said, you still need Ukraine to sign off on that. I don't think they're willing to give much at all. I don't think they're willing to do that. So I mean, this could be another thing where we feel like we're getting close to a deal, and then it doesn't happen, and then you get that bullishness come back for the corn and the wheat. Maybe you get a pop from that. But ultimately, yeah, I think the market mentality has shifted a little bit to the idea that, like, all right, an export quarter might happen at some point. I don't think, even if an agreement was made, though, even if the Ukraine were to agree with it, I don't think that we just flip the switch and all of a sudden we're exporting, because there's a lot of damage at these ports. The main ports are the ones that have been, Odessa, and I'm not good at pronouncing the Ukrainian.
I'm not either.
The two main ports that you look at for the Ukraine for grain exports are the ones that have been under major attack. We heard earlier in the week of two grain terminals getting hit. There are people there to work the ports. We continue to talk about, well, insurance issues for vessels and things like that. So, I don't think it's just like a night and day thing. But if an agreement is made, it will set that progress in motion. So, yeah, it's certainly something that the market's been paying attention to. And again, I think the feeling is that we're maybe getting closer than we have been since the beginning of this thing.
And I think as well, overall here, Ted, I think it comes back to managing our emotions when we have volatile weeks like this. Because obviously, you might have a farmer who was sitting, end of last week. Oh, there's still $7 cord out there, and now we're taking $1 off cord. So, would you agree that it kind of just comes back to managing our emotions as we're looking at our operation and looking at our marketing plan, our bottom line, and knowing what we have on the books and what we don't have on the books right now?
Sure, Justin. I mean, look, money is an emotional thing, but especially like when you put so much of yourself into creating these things, and then all of a sudden somebody's going to tell you it's worth less. But yeah, absolutely, managing emotion is absolutely paramount. And at the end of the day, it is money. And look, there's lots of ways to make money with these markets, but in particular, when you're sitting at good prices like this, and you're watching input prices for the most part come down, you got to be feeling okay right now. You really should. I mean, you got to kind of say, well, all right, I didn't sell the high, but look, I'm still really very profitable. I need to take advantage of this. It's the guys that are going to stick their head in the sand that I'm most worried about, because if you did pay really high input costs, which most of us did, then you really have to compensate for that by getting high prices for your grain. Well, like we talked about, I mean, we could be setting up for a perfect storm coming into harvest. And if you don't do anything to price things out and you wait, and we get into a scenario like that, and I mean, you're leaving the door open to be wildly negative on your profit margins this year, when you could have been really very positive. So I think this year, more than really any year I can think of in recent history, you have to be really on top of your marketing game. And you can't let a week like this, or, we're not at highs. You can't let that affect the decisions that you're making. So you really have to work very hard to take some of that emotion out of it. Yeah, it's tough. I mean, even for me, it's tough because, I don't like to be wrong. So changing your mind and things like that. I mean, look, these are, as humans, it's hard to say that. It's hard to do that. So I guess whatever seat you're sitting in, managing emotions is a very big part of what we're doing here. But again, look at the balance sheet. Look at, take a step back and say, hey, 673 and a quarter December corn. Wow, that's a really good price, right? I mean, historically speaking, we're at the very tippy top of the high end of the range, right? So yeah, again, think about what you paid for inputs. Think about what your profit margins are. Think about what could happen with that. The risk that you have is tremendous. So again, pay attention, do things. Don't just sit there.
Real quick on the livestock markets today, I felt like the cattle market kind of did what I figured it would ahead of a cattle on feed report. Hogs, a bit of a recovery there, but still rough week in livestock overall. We're in summer grilling season. Anything stand out to you in cattle and hogs here as we wrap up this week, Ted?
It's been interesting all week to see that you haven't really had livestock as a whole respond to sharply lower feedstocks. You would think, hey, that should be really rather bullish. But, going back to everything we started to talk about, there's this undercurrent under the markets that, we talk about fundamentals, Jesse, because that's what we do. That's what we're trained to do, right? But there's these outside factors that sometimes don't really matter much. Other times maybe matter more than the individual fundamentals of a market. And I feel like this was one of those weeks for the livestock where you just have this major concern about, everybody's now talking about we're headed for a recession. The Fed's raising rates. We've already had, one of the worst years of the stock market in decades. The amount of wealth destruction, people's 401ks are getting hurt. The stimulus checks have dried up. So guys are, the people that were relying heavily on those stimulus checks are now relying heavily on their credit cards. But now credit card interest rates are going up, which means they're going to have less purchasing power, which means we're going to spend less money at the grocer. Oh no, right? I mean, so all of this it's really happening. Again, maybe we see a bear market recovery in the stock market. Maybe it gets out of bear market territory. Maybe we start feeling good about things for a time again, and then we can say, yeah, there's a lot of upside potential. There's still a grilling season left. But as long as we have this concern and everybody, talking about headed for a recession, I think it's going to be hard to have any meaningful long-term rally in the livestock because, again, there's just so much concern about the demand. I think actually, though, Jesse, demand's going to be really good until you get to about middle of July. But again, we're running kind of thin on that time frame too.
Very true. Well, Ted, we're against the clock. Always great to catch up with you, sir. And I know if folks need to reach out to you, they sure can at Zaner very easily. How can they get a hold of you?
Yeah, you can just call my phone that sits on my desk. It's 312-277-0113. Other than that, you can find us on the web at www.zaner.com. There's also, we've got a marketing app. It doesn't tell you when to market. That's my job, but it does help you keep track of everything that you've got going on the cash side and also on the futures and options side. And it's a really cool tool that we just released into the wild very recently. So check it out if you get a chance. And otherwise, I'm on Twitter at the Ted Spread. I talk about markets, talk about cars, talk about ethanol, working out and watches sometimes too. So lots of different things.
He's entertaining on social media, and he's very intelligent when it comes to the commodity markets. We appreciate the analysis as always. With that, Ted Seifried of Zaner Ag Hedge. Have a great weekend, sir. We'll talk to you again soon.
Thanks, Jesse. Always a pleasure. Thanks for having me. Talk to you soon.
And that's going to do it for Market Talk on this Friday, June 24th. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great weekend.